Rates are down to 3.6%. Rental vacancies just fell to 1.2%, and investors are borrowing at record levels. That combo can squeeze first home buyers and push prices again. Here are 3 moves I'd make this week. 1 path for property investors, 1 for first home buyers. I'm Scott. I help Aussies fix their money structure and buy quality assets. This is education only, not advice. This is your daily property update. Now check out these charts. Now guys, the cash rate is now at 3.6% after last week's 0.25% cut. Rental vacancy rates have hit 1.2% in July. This is the tightest in 1 year. And prices are actually up nationally across the board, 0.3% month on month and 4.9% year on year. Every single property market right now is growing. So we've got the perfect storm here for investors. We've got cheaper money, we've got tighter rentals, which means increased rent, and we have growing property prices across the board. This is driving a huge influx of property investors into the market. It's getting a little bit out of control, guys. Now we are moving into spring. That's when things are really going to take off. That's going to be more people out there shopping for property. Fresh ABS stats and bank data shows investors are back in force, borrowing at record levels. That lifts competition on first home buyer property. Now, the properties that investors like are typically the properties that first home buyers like. So this is going to be a war between investors and first home buyers. This will be happening amongst that all-important sub $1 million price mark. All property, apartments, houses, anything will move and will grow very, very quick. Now, move number 1, you want to lock your finance in like a pro. What you want to do right now is that if you're out shopping for property as a first home buyer or an investor, if you have your pre-approval, you want to refresh that pre-approval right now to find out what your new borrowing capacity is. Now, you also want to ask your broker for 2 scenarios. You want what you can borrow today, but also what you can borrow with 2 more rate cuts and what you can borrow with 3 more rate cuts. You need to have that on the table to work out your cash flow and also your buying capacity for when you start to hit the market, because competition will be fierce to pick up the best properties. So guys, move number 2 that you need to make is you need to get your cash flow set up. You need to have the right structure there. Because interest rates are dropping, you will now be charged less on your mortgage. What that means is you could easily start spending that money on lifestyle, because your mortgage is actually going to be billed, direct debited every month, let's say. And then what will actually happen is that payment will actually come down to the minimum repayment. Now, if you do not top that up, or if you do not have all of your money flowing into your offset account to reduce daily interest, that money will be wasted. It will be wasted on lifestyle, because guys, we're not tracking our money carefully and correctly each and every day. So you guys want to automate that right now, set that up in the right structure right now so that that additional money will be in your offset account. Move number 3, if you're an investor, guys, you want to be attacking the property in the affordable end of the market where vacancies are incredibly low, where there's going to be strong population growth and strong employment. If you can pick up brand new quality assets, really beautiful assets with high amounts of depreciation to increase your tax deductions, if you can pick those up right now, it is going to be a real winner for you in the next 1 to 3 years. Now, for first home buyers, you want to get something that's low maintenance and livable from day one, something you can move in that's going to meet your living needs. Now, you're not trying to live like a millionaire and get everything that you want in your property. You just need something that's going to allow you to be in the area that you like, and also you want something that's going to meet your needs. If you work from home, you're going to need that space. Depending on how many people you have living with you, you're going to need that space too. Just try to tick off those boxes as best you can, but do not delay purchasing that property, because prices will grow and you could be priced out for good. Also, you want to avoid the renovation trap. Construction costs and actually getting the skilled labor to come in and do a renovation and material costs are extremely high. And a lot of people totally underestimate how much it's actually going to cost them to do a renovation. So absolutely do avoid the renovation trap. Now, I want to give you that advice to the investors. Also, a lot of buyers agents and course creators and so on are out there saying, hey, buy, renovate, hold, then flip. That would be absolutely the wrong decision to make, because you're going to be putting a lot of cash and a lot of capital and a lot of liquidity into your renovation when you can simply use that to buy a higher quality asset from day one with more depreciation. So guys, this rate cut's going to be pretty good, because on the 700K loan, that's a 25 basis point cut. It trims roughly 1,100 to 1,300 a year off of your loan, depending on the rate that you're on right now. 2 more cuts this cycle, and you're another $300 to $400 better off. If you add in the rate cuts that we've already had, guys, this is $4,000, $5,000, $6,000, $7,000 a year in interest savings that are going to be going straight to you. Now, if all of that money is actually structured correctly, going to your offset account and reducing daily interest, this could potentially knock 5 to 9 years off of your current mortgage. So guys, do not waste this opportunity. Get structured correctly. So what you need to do this week, number 1, email your broker, refresh your pre-approvals if you're out looking right now, and actually do the pre-approvals based upon a few different scenarios, what you can borrow now, what you can borrow with 1, 2, and 3 rate cuts. Start to factor that into your buying purchase decisions. Number 2, make sure that you're structured in the right way so that all of your cash is going into your offset account, not sitting in an account earning daily interest. You want to be saving daily interest because it has actually worked out to be a lot better for you. This is because interest rates on term deposits and interest rates on savings accounts is falling. 3, if you're a first home buyer, you got to get out there right now, guys. Shortlist 3 to 5 properties that pass your criteria and start booking in those inspections and start getting out there and looking at those properties. As for investors, you want to get in before spring. Once spring hits, the momentum of the market could leave you behind $30,000, $50,000, $80,000 of equity growth. You want to start making those moves right now. So guys, remember, rates are down, vacancies are tight, investors are attacking the market. These are the plays that you need to make right now. So guys, this is your daily property update. Like and subscribe for more information, more motivation, more inspiration, and more knowledge around the property market, investing, acquiring assets, and structuring your money correctly in the right way.